Hey, you! Thank you for listening to the Bitcoin Takeover podcast. This episode is sponsored by Sideshift.ai, Starkware, Layer 2 Labs, and Hodling.ch. Don't forget to subscribe! Hello there and welcome to the Bitcoin Takeover podcast. I'm Vlad and my guest today is Richard Werner, who is a world-renowned economist, someone who has been at the highest level of central banking and could have been wearing a suit right now, making a lot of money, but he's not, and he actually likes Bitcoin. And to me, it's very intriguing. I met you for the first time 4 years ago, and I was thinking, this guy used to be a banker. Why should I trust what he says? But you seem to be in favor of smaller banks, of decentralizing central banks, and you also seem to be in favor of collecting data and doing economics not according to ideology, but according to data. And I guess there's something to unpack here. So my first question for you right now is, why do you like Bitcoin?
Well, I'm intrigued by alternatives to the current system. And I've been looking for alternatives because the current system where particularly the central bankers, the central planners at the central banks have been in control has created a lot of problems for a lot of people. It's the central planners' dominance that's been the issue. So what do we do? And so I found Bitcoin intriguing in the sense that it's seen as a way of having some more decentralization and having alternatives to the current central banking dominated system.
So what is wrong with central banks? And I know that you might have been, I don't want to speculate, but you might have been the first author in economics to say that private banks are the ones that are actually issuing the inflation when loans are being given.
Yes, that's the empirical study I did. It's published 2014. If you look up, it's open source. You can get it easily. It's called Can Banks Individually Create Money Out of Nothing? And the second paper is also easily accessible, called Lost Century in Economics, 2016. And in these two papers, I empirically tested and then could show that when banks give a loan, they create money out of nothing, because until then it's been actually controversial, and even when some people were saying this, it was disputed by many others, particularly the mainstream economists and certainly the journals and textbooks. Actually, many are still, even now though it's been disproven, debating this. But it's now quite clear, empirically. It's been demonstrated banks are special. They have a special power, namely to create money. And that's, of course, quite attractive, quite intriguing. And I consider that as a tool. And like any tool, tools can be used for good and for bad. I notice that it's been used for bad quite a lot, but it is possible to use it for good. And that's what I've been trying to do, to use this enormous power of banks. And therefore, we're talking about decentralized and as you mentioned, small bank, local banking, as a tool for good, instead of doing what the central planners are currently saying. They're saying, hey, once my studies were out, they were pretending they didn't know, and that, oh, wow, we've just discovered, oh yes, it's true, banks create money out of nothing. Oh, that's bad. Well, let's quickly abolish this. Let's take away that power from ordinary people so that it can't be used by ordinary people for the benefit of ordinary people. And that they literally now want to abolish banks and become the monopolists, where the banks are driven out of business and only the central planners survive with their central bank and their central bank digital currency. And actually, I'm sure you're going to mention that, but central bank digital currency is an interesting topic because it's a key case of how central planners operate. They, first of all, spread a lot of misinformation. They don't want people to know the truth. What they call CBDC, central bank digital currency, is really ultimately the offer by the central planners for you and for me and for everyone to have an account at the central bank. And therefore, it's the central planners and bank regulators competing directly against the banks. And once you realize, well, they want to compete against banks, Now that makes sense, looking at their past policies in the last 20 years being very anti-bank. Why were they taking such anti-bank policies? Because they're already planning to compete against them, and ultimately central bank digital currencies, if we allow them, will drive ordinary banks and small banks out of business. They will disappear, and the banking system will become so concentrated, ultimately only the central bank will survive. And that is a dreadful thought. I mean, we can't overstate the potential negative consequences from this, because it gives totalitarian powers to technocrats over our daily lives of an extent that's unprecedented in human history.
You're on a panel today with an Austrian economist who's following the ideology. And listening to your debate and conversation, I realized that most Bitcoiners are just as Puritans when it comes to ideology, even in the absence of data to back it up. They just think that this utopian system, which is very logical, as you pointed out, they think it's going to work if it's going to be applied by the right people. It's just that it was never tried, just like true communism or something very utopian. And I want to ask you, what would you tell someone who is so convinced that Austrian economics is the way and praxeology is the only way to look at economics, in order to open their eyes and say, you know, there is so much more to economics than this, and you should not throw in the garbage everything else that does not fit your narrative?
Yes, and of course, first let me start out that there's a lot of common ground we have with Austrian economists. They are critical of the mainstream economics, but you see, the trouble is actually with any school of thought, they start to have gurus. And they start to have these great minds. For the Keynesians, of course, it's John Maynard Keynes. The funny thing there is that he said so many things, so many sometimes contradictory things, that you can get a quote from Keynes on almost anything for any view you want. But still, so they have their gurus, and the Austrian economists have their gurus. And then if you say something that is against one of their gurus, then they will get quite upset. And we shouldn't really have gurus. Basically, we should all be, humans are equal. We're all equal. And we should, if it comes to technical things, what is the neutral, the objective way of handling this? I think it's basically the empirical scientific method, which says that we need to look at the data, at the facts, and then yes, we can make theories, we can have propositions and hypotheses and theories, but they should be derived from the facts. And then any theory, any hypothesis should be tested by the facts. And that's how you weed out, and that's how you have progress in humanity. And that's the only way. And of course, if you look at physics, if you look at chemistry, biology, have we made progress in the last 200 years? Boy, we have made progress. It's amazing, literally. But in economics, there has been no progress for 200 years in the mainstream economics. And that's because very early on, economists switched to this alternative approach, which is not the scientific approach. It's the deductive axiomatic approach, where you have axioms and assumptions, and you create a theoretical, ideological theory and approach. Now, this may be extremely logical, as actually it is. So it's kind of tempting, because we humans, we like logic, and we tend to get lulled by logic into thinking, well, yeah, this must be true because it's very logical. Now, the fact is, you can have a beautiful, very logically consistent system, which, however, is entirely theoretical, abstract, and has no relationship to the planet we live on. And that is actually what's happening in economics, where the mainstream approaches and also some alternative approaches are very ideological. They have logically consistent theories and models, and therefore they're quite appealing, and therefore they have lots of followers. But they're just not true. Whether something is true or not doesn't depend on logic. Logic is important, and mathematics is pure logic, and clearly mathematical systems are very important. They're powerful tools, but tools for what? You see, whether a theory is logical doesn't tell you anything about whether it's true. Yes, if it's illogical, maybe it's not likely to be true. That's true. So it helps you maybe weeding out. But if you found something that's very logical, logically consistent, that alone doesn't mean that it's actually true and describes the reality we are facing. Only facts can do that. And therefore, clearly, the empirical, fact-based, inductive methodology, which is also known as the scientific methodology, and it's the one used in getting all our results over the last 200 years in physics and chemistry and biology, is the superior approach. Whereas ideologies love the deductive approach because they can perpetuate their ideologies and make them actually resistant to testing and to checks and fact-checking, real fact-checking. And therefore, we have to be very cautious about that. We should really use the scientific method. And that is open-ended, scientific method. And, when they say follow the science, what they were doing in 2020 and the years after that was really, they were saying, don't test and don't check, which is a contradiction because science is all about being critical, being, open to testing by empirical facts. So you don't follow the science, you do the science. The science means testing, constant testing and checking and rejecting hypotheses and even theories, even if they're logically consistent, just because they're empirically not true.
Hold up a minute. Did someone just pay you in stablecoins? Swap that CBDC wannabe for free market, scarce, and provably yours BTC with Sideshift.ai. Do you want to swap your BTC for something else? Use Sideshift, the direct-to-wallet exchange. It's fast, it has lots of liquidity for your needs, and the fees are lower than you might expect. Sideshift is also available via integrations with Trezor Suite and BTC Pay Server. Check out Sideshift.ai today. And yes, you can also use Sideshift to dump every other coin and token to make more BTC. Keep stacking, man. Sideshift.ai. I did an interview with one of the conference participants, Ben Ark, and he told me that CBDCs are actually pretty cool because they can enable some privacy. So from a technological perspective, for small amounts being sent from one customer to the merchant, there can be some confidentiality in there for like €100 or something. What do you think? Because basically CBDCs are a way to control both the supply and the demand for the currency. You can prevent people from spending, you can limit the ways in which people can spend, you can give away helicopter money that people can only use to buy certain products or services. It's very dystopian. We had the example from Canada with Trudeau stopping the truckers from doing any sort of economic activity with their bank accounts. What is your understanding of the phenomenon, and do you think it's gonna blow up and become much bigger, or do you think it's just a paper tiger and we should not be worried about it?
We should definitely be worried about it. In fact, we need to do more than just be worried about it. We need to actively, everyone, engage and make our opposition known. We need to oppose this peacefully, but we need to oppose it strongly and clearly. We need to stage demonstrations in front of central banks against central bank digital currencies. Now, to come back to your point on privacy, I mean, I got a laugh when I heard that, and I have heard it from some central banks like ECB, Madame Lagarde, saying, "Oh, it'll be so much privacy and so on." Well, is there going to be more privacy than paying in cash? No, it's always going to be less. And oh, how gracious of you to give us privacy for transactions up until €100 or some such sum. Oh, that's very generous. What about the transactions that matter, which usually will be the bigger transactions? And also, obviously, even if they told us now, oh, it'll be 100% private. Why? Because look, there's a setting here. It will show you, here's the button. We press and it's 100% private. Well, that's a joke, right? They're in control. They can press the button and from tomorrow it's suddenly not private anymore. And what can we do about it? I mean, so it's a fact that they're programmable. Gathering our information is just the beginning of it, and they can, use that information for whatever purpose. But it's really about intervening in our transactions and shaping our behavior. And we've seen it in 2020, all the things they come up with. Oh, behavioral psychology will be applied for the greater good. We have to protect these people out there. They don't even know what's good for them. Well, we'll nudge them to do the right things and buy the right things. And don't central bankers know much better than us what we should spend money on? Wow, what a wonderful world we're looking forward to with CBDCs. By the way, how sinister the whole thing is becomes clear just from their marketing, which is not genuine. It's very disingenuous. They've been presenting the CBDCs as a response to Bitcoin. Oh, there's some digital currencies out there like Bitcoin, and so we central planners are now forced to react. We need to play the same game, and clearly there's demand for Bitcoin, so we have to create something else in response. We also have to have digital currency. That's been the marketing spiel. But hang on, it's a complete misunderstanding, because number one, digital currency is not what's new about CBDC. We've been using digital currency way before Bitcoin. So that's really not the point. We've been using digital currency for decades. In fact, most people are always using as a majority instrument digital currencies, bank transfers, and they get paid by digital, means, whether it's through PayPal or debit and credit cards or through directly the banking system. So digital has been around for ages. What's different with CBDCs? The C. We've been using bank digital currencies, BDCs, for ages. What's new is the C, the centralized aspect, which is only good for the central planners. So basically, I'm contending that there is no good argument for any of us ordinary people, even for businesses, to welcome the introduction of central bank digital currencies. There's no good argument. There are arguments in favor, but they're all arguments in favor of the central planners, because it increases their power, their influence, their control, their information advantage over us. So before we should let the central planners, who really have delegated authority from us, right? Before we let them even contemplate this and put resources to studying the schemes and studying the technology and preparing for the launch of CBDCs. No, before then, we should say it's the other way around. Central planners, anyone who works at the central bank, their daily transactions of all their money, what they're buying and where they are, that should become visible to all of us. Right? And we should also actually be able to vote on what they're allowed to spend their money on. Before they contemplated doing this to us, we should ask them, well, you do it first, guys. We're not going to watch all your transactions, and we're going to have power to vote on whether you should be able to buy this or that. And then let's see how popular the scheme is going to be. I think it will be quickly off the table.
But at the same time, there is RFK, who is a political candidate for the presidency of the United States, and he talks all the time about putting the budget on blockchain to allow every transaction to become publicly visible and auditable and unquestionably real, because you can see that it's there. But basically, what I think when he says this is that he's pushing for a CBDC, because what kind of currency is going to be used on this blockchain? Well, something created by the government or the central bank of the US. It's not going to be private money. And it's just something that's going to open up the gates of hell for making CBDCs more acceptable.
I think you've put that really well. Absolutely. I entirely agree. I mean, I like him as a person, and and I would say most of his policy suggestions seem quite sensible, but there are some areas where I would disagree, and that's definitely one of them. And you wonder whether his choice of proposed vice president, if he's the president on the ticket, and his proposed vice president, somebody somewhat connected to Google in some ways, whether that's been one of the reasons. But it is kind of strange how on some, granted, important issues, he has policies that are sort of not really consistent with his otherwise with his ethics and with his outlook and with his approach. And you wonder whether that's how it works, whether you can only be a candidate if you conform on some key red line issues, red line for the establishment. And it's sad to see that he's, pushing that angle, which could so easily, as you correctly point out, be abused into a CBDC system.
Yes, where I come from in Romania, my girlfriend makes fun of me sometimes because 50% or more of our daily transactions are settled in cash. And I don't keep money in my bank account, or if I just keep the bare minimum to make some payments for bills or whatever. But as often as I can, I withdraw cash and I pay to the shop in cash, and I don't mind carrying coins in my pockets. I think, I don't know, maybe I grew up in a different time. I see kids these days just tapping their phones and saying, yeah, I'm paying like this. And my girlfriend asked me once, why do you carry cash all the time? Do you want to do crime or something? And I told her, maybe that one day I'm going to want to do crime because the government becomes abusive and it's morally imperative for me to commit a crime. And there's not going to be this mean available to me to be able to use cash for a transaction. So if I don't create demand for cash, it's going to disappear. So I have to keep going. And I'm curious how it is in other countries that you visited. Is cash disappearing? Do you think it's still a pretty good solution? Should we replace it with something else?
Yes, I think it's sad that now cash has been linked to crime when really cash is a basic right. It's a human right, I think, to be able to settle transactions with a means of payment that's under our control. And the spending is under our control and under no visibility to anyone else. Of course, that's the problem central planners have with cash. They don't know who's spending what, when, and where. And also they can't stop it because once the cash is issued, it's circulating. They can't stop transactions. So you see the motivation is already wholly wrong to argue against cash. And the whole link to money laundering or tax evasion or crime, that's been basically it's a technique of blackwashing by saying, look, it's associated with bad things, so cash is bad. No, cash is just one of the different ways of settling transactions, but it's one where we have more freedom and we're less controlled and less monitored, and that should be good. Crime still remains crime, and I'm not encouraging crime or any illegal transaction, but what I do encourage is let's use cash, and I entirely agree with that point that we should use more cash all the time than we're actually using. Even if sometimes it's inconvenient, because it's important to keep up the demand for cash and also make clear to the central planners who have the statistics all the time, because they will use at some stage the data, ladies and gentlemen, there's no more demand for cash. The use of cash has dropped so much, we've decided to, there's just no need for it. We're going to dispense with it. And of course, that's the moment when people will regret it, because cash is freedom. And the central bank digital currency is the entire opposite of that. So yes, I think it's good to use cash. Cash is still a credit instrument. It's a liability of the central bank. So it's still, in most countries, issued by the central bank. And before central bankers argue against cash, they should be careful, because we would say, hang on, so you don't think cash is a good idea? Well, why don't we then have an alternative system where it's not the central bank that's issuing liabilities, but it's the government? Because there is a difference, you see. And look at Europe. The ECB is not accountable to any government in Europe or to any democratically elected assembly. It's above them. It's outside the law. No public prosecutor of any country, even Germany, Frankfurt, can do anything about anything the ECB is doing, which is very strange. And it's actually undemocratic, and even central bankers have said privately that they're worried about the excessive powers of the ECB already as it is before CBDCs, and what they call the democratic deficit of the ECB. It's not a democratic institution at all, and it doesn't fit into democracy in Europe. So if they are now saying, we have second thoughts about ECB promissory notes, which is legally what cash is, then, hang on, let us population, let us people also reconsider that. And let's say we don't want ECB cash anymore and any form of ECB liability. No, we want only democratic money, which is money issued by democratically elected governments. How about that? If we want to have a debate about things and shake up cash and try to introduce CBDCs, well, instead we should be pushing for state money issued by democratically elected institutions. Of course, the other thing that we really need to push for is local banks, because banks create money, and by having local small community banks, they're locally accountable, unlike the ECB, unlike big banks. Deutsche Bank is not accountable to anyone really. Central planners don't even know what the big banks, UBS, Credit Suisse, are doing. That's how Credit Suisse disappeared in the end. But small local banks is a different story. They're also not systemically relevant, so there's no excuse for over-regulating them. They need to be deregulated. Creating small banks needs to be deregulated. We need to be able to create small local banks. We need to support small local banks. Investors need to help me invest in small local banks so we keep them independent. They're not taken over by other banks and merged away. The central planners have been working to reduce the number of banks in Europe. Successfully, the ECB has killed 6,000 banks. They've disappeared under the watch of the ECB. We need to stop that trend and create more local banks, support local banks, and also make sure they're not merged away. And that's one of the things I've been doing in my work, and I hope your audience is going to support me.
Hey Anand, have you heard of STARKs? Scalable Transparent Argument of Knowledge. It's a protocol that uses zero-knowledge proofs to make transactions more scalable and private. Currently, this tech exists only on Ethereum, but if Bitcoin activates OpCat, we're going to get STARKs too. Learn more about STARKs by listening to Season 15, Episode 36 of the Bitcoin Takeover podcast with Eli Ben Sasson. Also, consider supporting OpCat. You mentioned something interesting, and I was going to say this also, because I really wanted to interview you last year. It was not possible, but I'm happy that we do it this year because there's a lot of data that came to us. So we had the Silicon Valley Bank in the US that collapsed, and then something happened, and then we had a situation in Switzerland where Credit Suisse was bought out by its largest competitor, HSBC. UBS. And basically the government intervened to arrange that buyout and make it very fast so that people don't lose their faith in the banking system in Switzerland. And it made me wonder, when it happened in less than 1 week, all this acquisition and all of these decisions were made very fast. Is there any private banking anymore? Because it seems like the government has such an outreach and such a control over private banks that they can intervene and do this sort of stuff. And it's unclear to which extent they're independent. And I guess you're right. We need small banks at the community level.
Yeah. Yes, actually, these are two interesting case studies. So the Silicon Valley Bank and Credit Suisse. Of course, there were other banks in the U.S. as well. In the in the shadow of the disappearance as an independent bank of Silicon Valley Bank, also other banks were shut down. But let's analyze Silicon Valley Bank because it's the highest profile case. What really happened here? Let's go through the sequence of events. First event was already way before the panic when this happened in March last year. And that was Silicon Valley Bank lost depositors. So depositors pulled out money. It was in the low billions, but it was some serious money was being pulled out. This happened gradually, but it happened. Now, what we next find is a very strange, very unusual, and very bad response by management. Any experienced banker would not do this. Namely, the bankers at Silicon Valley Bank responded to this not how any other banker would have responded. Namely, oh, we're losing deposits, let's gather deposits. Let's have advertising or announcement that we have special savings accounts, we're paying slightly nicer, higher interest rates, put your money here, and you raise deposits. Now, this way you can raise a lot of money. They didn't do that. They didn't do that. That is really strange, unusual, to put it mildly. What did they do? Because the Federal Reserve had raised interest rates very rapidly just before, so suspiciously timed, just 6 months before, massive rise in interest rates, market rates, central bank rates. And of course, whenever rates go up, always, this is just a fact of finance calculations, net present value calculations. When interest rates go up, because we use interest rates as the discount factor to value assets. Higher rates mean the theoretical calculated value of any asset goes down. Okay? And so when interest rates go up, the book value, which is just on paper, of the bond holdings of Silicon Valley Bank's US treasuries was going down. Okay, now this is normal, happens whenever central banks raise rates, and shouldn't really be even a news story. But it's a very strange spin put to this time round, this time of raising interest rates, totally forgetting the dozens of times in the last 30 years when this happened. The journalists writing about, oh, American banks have unrealized losses, my. And even the strange behavior of the public Federal Deposit Insurance Corporation, FDIC, their bank regulator, a very strange bank regulator because they routinely close down healthy small banks. They love to close down banks. They've always closed hundreds of small banks because America used to have tens of thousands of small banks. It now only has 5,000 banks left. And still the FDIC keeps closing healthy small banks. So that already tells you there's something strange there. Now, the FDIC has gone on record since roughly October, November, so that was in 22, saying, oh, we're concerned about the unrealized nominal paper losses in the US banking system. Now, already, it should make us suspicious. Why is this bank regulator talking badly about banks? It's kind of, as a bank regulator, you shouldn't really talk down banks. And also, particularly on this point, it's nonsense because whenever interest rates rise, of course, you have some kind of nominal valuation loss in the case of should you want to sell those bonds right now. But the whole point is these bonds are long-term bond holdings, which banks actually required to a large extent to hold by bank regulation. This was introduced Basel III, the liquidity buffer. We need more highly liquid, high-value assets or government bonds, U.S. treasuries. And if rates rise, yeah, they're worth less on paper, but we're not selling them because we never have to sell them. Why? We can use them to get a repo loan from the central bank or in the interbank market, they're almost as good as cash, right? So it's nonsense to say, oh, now US banks are sitting on these billions and trillions of losses. But, search the internet, you get all these stories and data is the chart from the FDIC. They've been pushing that story. So that's already misinformation. So, but back to the point. So step number one, Silicon Valley Bank lost depositors. Okay, but in response, they didn't raise more deposits. No, they said, oh, let's sell our US treasuries. It's like, what? Why? Oh, because then if you sell them, we get money. Well, hang on. Then you're realizing losses that you'd never have to realize. Why on earth would you want to do that? As if there's no other option. They essentially were acting dumb as if there's no other option. Like, this is the last option you would go for. But there's so many other options. They could have borrowed from the interbank market. They could have, obviously, number one option is to raise deposits from depositors. They could have borrowed from the central bank by getting a loan, a repo with the treasuries without selling them. I mean, the list goes on. Why would they sell their treasuries at a loss and therefore realize losses that you never have to realize, if you run your bank properly? Okay, but that's where the oddities, continue. They don't stop there. Next, Silicon Valley Bank leadership decided, okay, we've now been super stupid as bank managers, how no bank manager would behave in two cases. Let's now publicize this at maximum, so that every financial analyst in the whole of the United States of America, in fact, the whole world, will know about our stupidity. And the best way to do this is to now raise money by issuing new equity. Because then all the financial analysts are forced to do proper checks of what you've been doing and then come up with a recommendation. Any analyst working for the big financial houses, Silicon Valley Bank was one of the larger regional banks, they will have to do an analysis and a recommendation. Should investors buy those new equity, those new shares to be issued by Silicon Valley Bank? Therefore, it's a way of highlighting your behavior until now, because it will come under the scrutiny of every single analyst in the US. And what was the conclusion of all the analysts? They all said, oh, Silicon Valley Bank has been quite stupid and they've been doing bad banking. We recommend not to buy those newly to be issued shares. Literally, this is what they all said. So what happened with the new share issue? Well, it flopped predictably, completely predictably. But at the same time, they've now advertised how bad they've been running this bank. So now the clock is ticking, because now everyone knew, oh, this is a bank run by people who don't know banking. Like, this is very strange, very unusual. Like, who's running this bank? And who's telling these bankers to behave in this unbanking, way of running the show? Well, so what happens next is, this was quite predictable again. Some large remaining depositors decide, well, hang on, we will also withdraw our funds. And as it turns out, one of the biggest depositors was, of course, a Silicon Valley investor called Peter Thiel, who is, known to be close to some secret services of some countries like the US and on some projects with secret service connections. But okay, he pulled out, as it turns out, all his money from all the many dozens, hundreds, I don't know, of Silicon Valley companies who also put their money into Silicon Valley Bank, because that's what Silicon Valley is famous for, Silicon Valley type of tech investments and companies in those spaces. So he pulled out his money and all the money from all the companies he was investing in, which is a big chunk. And then the next day he went public and told everyone else, by the way, I've pulled out all my money and I recommend everyone else to also pull out money. That's how you start a stampede, which happened on that day. Therefore, $41 billion, if I remember correctly, were pulled out from Silicon Valley Bank in one day. Now, every financial institution has normally a gate that you can close if too many funds are being pulled out. This is where the next surprise happens. Because Silicon Valley Bank just happened to have joined a new Federal Reserve scheme, which was just a pilot scheme. They didn't have to sign up to this, called FedNow, where their transactions of money in and out goes through the Fed, through their new FedNow system, and therefore Silicon Valley Bank was no longer in control of these money flows. They could not stop the outflows. Oh, isn't that a coincidence? So, $41 billion left Silicon Valley Bank in one day, the highest amount of money pulled out from one bank in world history in one day. apparently. So now the bank was bust, right? Actually, the next surprise is, if you think about it, what about the Federal Reserve? I've just mentioned the Federal Reserve. Well, what about it? Why was the Federal Reserve Bank, the Federal Reserve System created? Actually, there was a lot of resistance in America, which was a free country. It didn't have a central bank. They don't like central government in America. They don't like central planners in America. They don't like the Soviet Union system in America, in case you haven't noticed. And so how could they introduce what is a core pillar of the Communist Manifesto? Look it up. Communist Manifesto. It's in the top 10 demands of the communists, is to have a central bank. And then, as a next step, they say, and then monopolize everything so it goes only through that central bank. That's how you get a communist regime. So how could the Americans, freedom-loving, anti-centralist, anti-communist in general, how could they be persuaded to allow the creation of the Federal Reserve System? Well, there was one argument that was quite convincing. Of course, there were other tricks they used to convince them and actually push it through when nobody was there for voting, just a small group of insiders. But the single most convincing argument in favor of setting up the Fed is the following. Namely, banking systems are inherently fragile. They have one weak point. That is, if you get a run on a bank, the bank can be as strong as you want, as healthy as you want. But if you get a run on that bank, maybe for no good reason, just a rumor, just some panic that's not justified, very false, maybe created by a competitor, as actually happened in history very often, this bank, on its own, without help from the outside, will fail. And so how do you ensure the survival of healthy banks even when a run is being organized by, say, a big bank competitor? Well, okay, if you have a central bank, they can then step in, be the lender of last resort, and ensure that healthy banks don't fail due to silly runs on them that were staged. In the way that a run on Silicon Valley Bank has been orchestrated, as I explained. You know, that's an orchestrated takedown of a bank. So that's why the Federal Reserve was actually created, to then be there when the money's being pulled out and provide that money so the bank doesn't lose the liquidity and stays safe. Did the Fed do that? No. Where was the Fed? It sat on its hands until the bank was bust. Only after the FDIC had closed it down, then they suddenly provided all the liquidity needed. That's very strange. Well, actually, that is the track record of the Federal Reserve. In the 1930s, under the Fed's watch, more than 10,000 American banks died. They were allowed to be busted as money was being pulled out, and the Fed did nothing about it. And actually, at that time, there was no deposit insurance scheme either. So all the depositors, local families, local small farmers, they lost their livelihood, all their savings gone. No replacement from the government, just gone. While at the same time, their borrowings from the banks, they survived. Why? Because the banks were taken over by big banks, shark type of banks. They insisted now, these farmers, these same farmers who've lost their deposits, their life savings, they must repay those loans. That is outrageous. And that's, of course, what happened. You know, when you watch these movies in Europe, we have, you know, when I grew up, you know, you have these movies of, you know, the Western movies with the pioneers, the farmers, you know, reclaiming the land and building their farms, and the Indians and the various battles. And America clearly was dominated by small holdings, small independent farmers. It's a very decentralized system. Well, that changed in the 1930s when the Federal Reserve ensured that the farmers would lose their land and their livelihood, they would lose their savings, which is quite outrageous. And actually, if you look in the same time, in the 1930s, in the Soviet Union, what happened there? The communists created the collectivization of agriculture, which was about disowning the farmers and confiscating their land. And the same thing was actually orchestrated in America by the Federal Reserve. Wow. And that's how centralized big agro-business became so dominant and powerful. Monsanto and other agro-businesses now dominant in America. Sad. It's a very sad transformation from a decentralized, local farming-based community system to centralized big business system. And that was because they'd introduced the Federal Reserve, central planning, and that's how the central bankers sadly played it out. So that's the reality, and so that's the background to what happened to Silicon Valley Bank. A very strange takedown, orchestrated and entirely unnecessary. It has been used as an argument against small local banks, but very unfairly and very wrongly so, because clearly that's not an argument against small local banks. It's just an argument against central planners and their takedown techniques, and therefore the need for reducing the central powers and have more local banks that are duly independent and not dependent on central planning and rescue operations from the Fed, which will not be forthcoming when it matters. So we need to create different systems because the Fed system is letting down local banks.
Are you a Bitcoin maximalist? Do you want everything to get built on Bitcoin? Then read more about drive chains from Layer 2 Labs, an initiative to create a two-way pegged sidechain for every use case. Everything from Zcash privacy to Ethereum smart contracts will be available on a dedicated chain that pays fees to the Bitcoin miners and uses BTC for every transaction. But you don't have to imagine what this would look like. Go to layer2labs.com/download and check out the software. It currently runs on the Bitcoin Signet, but with your help, this grand vision of doing everything on Bitcoin will come true. layer2labs.com/download.
Well, it sure seems like the odds are stacked against small local banks, and I wanted to ask you if you see any solution for this, because politically it seems like it's not very feasible to run one of these. And also I want to tell you an example from Bitcoin where they have these, they call them Chaumian mints, and they're basically private banks where you have this trusted community member who's running the bank, and there is some confidentiality. All you can see is how much money is stored in these banks, but you don't see who's transacting with whom. And there are some advantages here, though I think it sort of defeats the purpose of Bitcoin, which was created for the purpose of eliminating trust in central entities. But I want to ask you, what is a model for a small community bank that you see as being feasible and not vulnerable to the caprices of these big banks or else governments that collude with them?
Yeah, well, I've learned a lot from analyzing the German community bank system, which has been very resilient to change for 200 years and has survived quite well. Of course, it's also been under pressure and under stress from the ECB and its excessive regulations and its interest rate policy, and also the ECB pushing even the local community banks in Germany to massively move into real estate lending, which obviously is not a good idea because a real estate bubble was created in Germany, and that has already burst and will continue to result in falling real estate prices, and therefore there will be pressure on many small banks. And I think there will be even a banking crisis in Germany. So yes, they are under pressure, and that's because the central planners are against them. But they are still the future, I think, because they're our banks. That's what people forget. You know, we want our own money creation. With Bitcoin, we can still mine money, but there is a limit. And that's, of course, one of the areas where I would argue that, you know, it's not an ideal system because really, I mean, it's good that there's controls on the money creation and the money creation process, but
what is the best way to store your Bitcoin? Do you need a multi-sig setup? Should you buy hardware wallets? And if yes, what kind? How many backups do you need? And how should you spread them around? These are all difficult questions which deserve an individual answer for every user. Thankfully, hodling.ch is here to help you. So if you're part of a company that wants to add BTC to its balance sheet but needs to figure out a multi-sig scheme, or you are a whale who needs to discover the safest long-term holding strategy, you can talk with Polto and Darko, the Swiss co-founders of Hodling. Their service makes you 100% sovereign and puts you in control. Not your keys, not your Bitcoin. Check out hodling.ch today.